Now, let's talk about inflation. A lot of people say, well, if the government created all this money, how come we haven't had inflation? So the CPI says that we've only had inflation of 2.4%. How many people have had more than 2.4% of inflation in the audience here? Can you raise your hand? Look at your hands, right? Don't be shy. Okay, so you can look around the room and see that most people have experienced a lot more inflation than 2.4%. So what is the problem? Is the CPI wrong, or what's going on? Well, you can question the CPI, as I have for many years, and I watch it very closely, but after doing a lot of study, I don't think the CPI is wrong a lot. It may be understating it, but what it happens is over the long run, it sort of catches up, but in the short run, it could understate it by 2% or more, and I think that's what's happened in the last few years. Now, fortunately, there's a way of checking that. There is an institute called the American Institute of Economic Research, and they have an independent, non-government agency that follows all the costs, and it's called the Everyday Pricing Index, and you can see it on the chart. That's the top figure, and you can see that the CPI is here, and the Everyday Pricing Index is there, so you can see that that is a lot more inflation than the CPI shows. Now, one of the reasons is the way they weigh it. In the EPI, the Everyday Pricing Index, they don't show any cost for housing because they're only doing everyday pricing, something that you spend at the grocery store, that you buy your clothes, things that you do on an everyday basis. The long-term trends of housing and car purchases are over a longer period, and so they kind of move that aside. The CPI does all of these things, and the housing has been very depressed for the last 5 or 6 years, so that has dragged the CPI down. But once the housing starts to move and it gets filtered through the CPI, it's going to play catch-up, and I think you're going to see a CPI that's much higher. Now let's take a look at the real inflation. The CPI says that for the last 5 years, we've only had 1.3, and in the last 10 years, 2.4. If you look at the EPI, it says 0.7 over the last 5 years, but 0.4 over the last 10 years. If you take commodities, which are a good way to look at inflation because these are all the raw materials, they have gone up 6.4%. And if you look at agriculture products, they've gone up 5.9%. So if I take that as an average, I think the average inflation rate in the last 10 years is closer to 4.68% than it is than the 2.4%. And I think the CPI is understating it. If you look at gold, it's up 14%, oil and gas is up 13%, hospital service up 5.9%. The only things that are down is the housing, which is 30% of the index, and apparel and auto. So most of the things are much higher except those two factors. And I think that the reason that the CPI is so lagging is because housing is 32% of the index, and then there's another 10% that is due to the fuel and things that go into housing. So basically, housing is almost 41% of the CPI index, and when that starts to move up, you're going to see much higher inflation.